Arab stock markets recover slightly after recording their steepest losses in one day. Despite official assurances, investors are panicking and markets are still shaky. How vulnerable are Arab financial markets, and do they suffer from the same problems as Western markets despite fundamental differences? This is Inside Story. Hello, I'm Nick Clark. The Middle East markets are slowly recovering after taking a hit as the global financial crisis unravels. On Tuesday, the major indices in the region fell for a straight third day. But some analysts are still worried even after government intervention. Shireen Tadros reports from the Doha Stock Exchange in Qatar.
For a while, it seemed as though Gulf states were immune to the financial crisis. Not anymore. In the last 3 days, the 7 Arab stock markets in the Gulf have shed around $150 billion of their capitalization. Abu Sultan has been trading at the Doha security market here in Qatar for over 10 years. He says the market has never been worse.
We didn't expect this. Even as we watch what's happening to the US economy, it still came as a shock how badly it hit us here.
Most stock markets in the oil-rich Gulf states suffered heavy losses this week. A round of interest rate cuts by central banks leading to a temporary rise on Thursday. Traders here at the Doha Stock Exchange say investors are quickly losing confidence in Gulf stock markets. The smaller and more volatile the market, the riskier it's seen to be. That's why foreigners are essentially withdrawing their funds, making citizens here even more jittery. As the global credit crunch deepens, investors in the Gulf and across the Arab world are panicking, causing stock exchanges in Dubai, Riyadh, Doha and Cairo to plunge amid falling oil prices and fears of a real estate bust in the Gulf. Amongst traders, there are mixed opinions about how serious the crisis is.
Fear-gripped investors are selling their shares. That's the reason why the market tumbles. You just need to spread rumors to see small investors selling all they got.
We have one of the best shares with a super yield, with an excellent dividend. There is no reason whatsoever for me as an investor to be out of the market.
Are we at risk? The answer is not long-term risk. The degree of risk is minimal as far as the GCC economies are concerned. Conceptually, the macroeconomic fundamentals are strong. The oil price is stable and functional.
Arab governments, meanwhile, are reassuring investors, not just foreigners, but also Gulf citizens who have billions of dollars worth of investment in US Treasury bonds.
The Arab countries are immune from the property credit crunch and the derivatives that cause this problem in the Western world.
But the problem may also be psychological. Even if Gulf states are not directly affected by falling prices in the US, the perception that there's a global recession is affecting confidence. Gulf markets in recent years have climbed substantially. Analysts fear that may also mean they have a long way to fall. Shireen Tadros, Al Jazeera, at the Doha Stock Exchange for Inside Story.
Well, joining us today to examine this are our guests in Cairo, Mohammed Taimour, chairman of the Egyptian Capital Market Association and also chairman of Faris Holding for Financial Investments, and in Beirut, Jad Chaban, a former economist at the World Bank and acting president of the Lebanese Economic Forum. Welcome to both of you. Now, first, I'd like to get a picture of who's potentially at risk in this region, who's buying and who's selling, who's investing. Dr. Taimour in Cairo, is it just big, wealthy investors and companies, or are other small investors exposed too?
Well, I think everybody's at risk. Maybe small investors more than big ones. Small investors in Egypt have been beginning for the last 3 or 4 years to invest more and more into the stock exchange. And you know, since May, the Egyptian Stock Exchange have been drifting lower and lower. And of course, in the last 2 days or 3 days, it plunged about maybe 25%, although it can recover today about 3%. But many of the people who are really hurting now are small investors.
Just to demonstrate the wild fluctuations of the market at the moment, I understand that there's plenty of money coming back into Cairo despite everything that's going on.
We're seeing a strange phenomenon now. Many of the big investors or the rich people who have funds in Switzerland or London or what have you, are now transferring money back into Egyptian banks. Something that we have not seen for quite some time, frankly. They feel that Egyptian banks are safer. And frankly, Egyptian banks have strong financial positions, all of them, because of various reasons that we can discuss if you want. But the phenomena of money coming back from Switzerland to Cairo is something new.
So it would suggest that there is some confidence in the region. Judge Shaban in Beirut.
Yeah, it's a sort of demonstration of a flight to safety. I mean, many people, of course, now are buying U.S. Treasury bills. But some Egyptians feel, if they bring their money home next to them, they will feel safer, particularly when they hear about, big banks in Europe and the U.S. Going bankrupt.
And Judge Shaban in Beirut, that confidence echoed by the Saudi Arabian Monetary Agency, who says the country is not exposed to the global financial crisis. But earlier we watched the Saudi Arabia lose, 10% of its market value in one day. Doha securities down 20%, something like that over the course of the week. It would suggest that the region is very exposed.
Well, I think investor confidence overall in all markets is disappearing, and many investors are thinking that stock exchanges and buying stock is not anymore safe investment. And I think there's a big move, especially from big players, to reallocate their portfolios and make them into better positions. And this is reflecting itself on the Arab markets. Although we thought before that there's a lot of liquidity in the region and that the Arab markets might be immune to all these problems, it is apparent that Arab markets are not immune to confidence. There's a rush to sell, and we're seeing this everywhere.
But why is there this panic? I mean, to an outsider, this region is awash with cash, isn't it? It's asset-based. There's petrodollars practically erupting through the floorboards.
Well, there's a lot of theories in economics and finance that try to explain investor behavior, and there is not really a single explanation why people panic. And it's really psychology at this time that's driving a collective decision to move away from stock market investments and go to safer, maybe real estate, maybe other types of safer investments. You can have a very good economy with good fundamentals like the States, and one trigger caused many investors to run away from markets. I think this is an indicator that our Arab markets are still not really transparent, and that information about investments is not flowing in the proper way. There are many governance issues where companies are not filing their proper fundamentals, and stock exchanges, we see some companies that are doing very well, but the whole portfolios are not really organized in a way that inspire confidence. And that's why at every blink or every small shock, everyone panics and tries to withdraw their money, or maybe, like you heard in regions, try to shut down the stock exchange altogether.
Dr. Taimur, Mr. Shaban mentioned there getting into real estate. If you want to get into real estate, Dubai is not the place to be right now. But why is that?
I mean, why is Dubai not the place, or why do people go into real estate?
No, why is Dubai not the place to be right now?
Well, frankly, I don't follow very much the real estate market in Dubai, but we all know that maybe there have been some exuberance in the pricing and the amount of supply that's coming to the market. And at one time, things have to let go. And I don't know whether I've reached that point or not yet.
Would you say that generally the Middle Eastern markets are more sheltered than Western ones?
I think, I mean, if you want to be rational about it, yes. I mean, most of the economies in the area of the Middle East are doing well. In Egypt, for example, we are growing now at above 7% per year. And we have been consistently doing this year after year, something that we have not seen for many years. But again, I mean, once you have this global systemic failure, the degree of uncertainty about the future becomes so overwhelming that even if you think rationally about your situation now, you really cannot predict what will happen 3 or 6 months from now, and as such you try to go to much safer investments. And certainly equities is a more risky asset than and many other investments.
Judge Shaban, there is pretty big Arab investment in the United States, something like $2 trillion, I think, half of it in treasury bonds. It's got to hit someone pretty hard, isn't it?
Well, you know, the treasury bonds are kind of a safe investment. What is really worrying is financial instruments and derivatives that are indexed on the stock market and that were managed by the big financial institutions and the big investment banks in the States. There were many products that, you know, multiplied in the last few years, selling almost anything from options on the carbon dioxide to stock shares in companies that are in emerging markets, to even buying financial assets based on you know, all sorts of indices. And Arab wealth funds and sovereign wealth funds were investing a lot in many different portfolios. And I think because of the excess liquidity in the region, they were searching for profitable investment, and that was the right thing to do. However, they were caught by what we call now moral hazard. There's a lot of non-transparency along the chain of financial analysis, of financial information. Markets were not reflecting the off-balance sheet items of many banking and insurance institutions. And you know, if one block fell, everything followed. And the problem is that the markets were not factoring this in, and especially not Arab investors. They and other investors were not having enough information about the real risks behind their investments.
All right, gents, we'll leave it there just for a moment. We're going to take a very short break, and when we come back, we're going to examine what the possible solutions are to the crisis in the Middle East and how do they differ from the West. We'll be back in just a moment.